Hi guys, it's Crypto Bear Page speaking. Welcome to today's exclusivity report. Today I'm going to brief you in, guys, on a couple of timeframes of Bitcoin USD spot price chart, of course, weekly timeframe to kick it off on Bitstamp. Okay, so well, naturally we're in the bear market, of course, right? So far we've got this kind of like a nasty rejection in the preliminary phase of a bear market rally, and in all honesty, when most of the stocks actually did manage to reclaim the levels back to their respective, 200-day average levels. Bitcoin did kind of like fail in the very preliminary phase, like I said. And even if we add this 200-day average on top, this is 200-week average, but if we add 200-day average on top, right, then you're basically looking at an idea that Bitcoin did fail. Bitcoin did fail. It did not manage reclaim to retest even the 200-day average as many stocks did. It not only shows a lot of weakness, a lot of underperformance relative to stocks, so relative downtrend on the relative trend basis, and at the same time you're looking at this nasty rejection of this kind of like a polarity flip at where the previous support area was, right? So naturally the old support area in $26,000 acted as a resistance, adding to this overall significance and relevance to the technical sell-off. So here I would argue that Bitcoin is really looking worse than better. Mm, if I would argue, if I argue from the technical point of view. Of course, the fact that we are trading again uh, on a very low volatility, kind of like a region below the 200-week average, which is ascending, which is nice. Here below the 200-week average, it's any sort of like close below a technical 200-week average support is virtually a losing situation, right? It's much more bearish than bullish. Whenever you get a bullish close or a close outside to the upside through an average, this confirms a bullish breakout. And on the other way around, when you get the bearish cross, as in the candle bar pierces through an average to the downside, it confirms a bearish crossover. So here we are truly looking at the subsequent failures, right? Not only the top failure and followed, of course, by this kind of like a wedge or bear flag pattern breakdown, but it also odds uh, more bearish tensions as we keep trading and sustain trading below the 200 week average. We actually, for the vast majority of the time, as it's seen, for the vast majority of the time, most of the time, we traded below 200 week average much more than above, which confirms the losing side, the bearish side is an advantage. It doesn't mean it cannot reverse, of course, right? We know that there is this resistance at $30,000, approximately $30,000, $31,000. This is the area, of course, very, I should say, confluent and and convergent with the other technical levels between 28 and $30,000 to act as resistance. So it's it's a mean reversion process. Sooner or later, Bitcoin would likely get back to those levels, recover back into the $30,000 region. We don't know how long it will take, right? Mean reversion process occurs naturally because of volatility that occurs within one security. And Bitcoin is largely volatile, right? So it means that there are going to be big deviations on both sides of the average, whatever the average shows. So one way or another, the bigger the deviation, the bigger the chances that eventually we would revert back and start moving towards the mean. But until that happens, we are truly about 70%, off the peak. This is not the safest bullish territory. I would argue 72% almost of the peak. It gets us closer to the support area of the swing low from June, right? And well, the chances are that if we keep trading below 200-week average, eventually there is going to be this kind of like a final puke or final, you know, drain off and a sell off to the downside following this final capitulation that may occur, right? So, in this overall helplessness and hopelessness that many traders actually are feeling, it may have a chance right there for Bitcoin that we are going to see some sort of like a rapid flash crash sell-off, similar maybe to what we saw, in the miners capitulation in 2018 over here, or the COVID crash, which slipped below the $4,000 support. So I'm not really ruling out anything like this. I still consider this, to be in the cards and in the table. I cannot really exclude such a possibility for this case. And then, if that happens, the chances are that we may actually see a little bit of this, well, more bullish reaction, probably in the area of 13, $14,000 maybe. You don't ever know where it goes. But if you were to outline any sort of like 80 to 90% retracement, which Bitcoin typically gets, this places us exactly in the territory between 10 and 12 and $13,000, perhaps even lower. However, I would be very skeptical about Bitcoin really going below $10,000. Maybe in the name of this flash crash, like I said, where the volatility peaks, where the sell-off climax peaks, perhaps just for like a fraction of a minute, couple of seconds, it may slip right there. But I would, of course, be extremely cautious about any predictions there. Then taking it to the daily time frame, like perhaps revealing a little bit of trend and less divergences, of course, less of the divergence system for the B Pro. This reveals a downwards trend continuation, right? The daily trend for the current upward trailer resurfaced after failure to maintain 22,500s, now which was the only bullish hopium that we kind of like got to see ever after breaking down $42,000 area, right? So the downward trend is really persistence. It barely kind of like let an allowed burst to stop for a moment. The bulls did manage to have their own 5 minutes, but it was nothing spectacular. The trend really barely made it upwards. Lots of weakness, lots of resistance, lots of sell-off, right? Each and every single rally was eventually capitulated and failed on top. So nothing but top failures all contributed to a pattern that develops better in the opposite direction, because that's what failed patterns do. So here, really looking at 21,729, I would argue that with this local rectangle, with this local range bound pattern that you're looking at, this consolidation within the frames here, now 19,500s and 2,500, stuff like this, arguably an upwards thrust over 2,500 may get us closer to the 21,700. But unless that happens, and it does not seem as much likely right now, uh, well, then I would argue that the chances are for a breakout to the downside. And if that happens, there is potentially a little bit more volatile move for ruling, crashing out the stop losses, committing a couple of whipsaws, um, and getting us closer to this final kind of like a June swing low at 17,500. I have no idea about, of course, what's going to really happen. I can only, comment on some mathematized or well-educated guesses, but it's still a guess. There is still very high chance that I'm wrong, that I'm not going to kind of like pinpoint the perfect reversal, off the bottom or off the peak. So take it with a grain of salt, if you will.